If you've been following the national headlines, you might think the Austin housing market crashed and is still in a freefall. For buyers who bought at the absolute top, the reality stings. Prices are down roughly 19% from the frenzy we saw in May 2022. But the freefall narrative is out of date. This line chart tracks the Austin median sold price from that $550,000 peak down through a multi-year decline. Notice what happens at the end. By March 2026, the price floor stabilized between $445,000 and $520,000, marked by a 9.2% month-over-month seasonal rebound. We are watching a rebalancing phase. Supply and demand are finally finding equilibrium. Right now, the overarching metrics favor buyers, but pending sales are already up nearly 14% as spring demand returns. Waiting on the sidelines for a catastrophic bottom that already happened simply means you're missing out on the stabilized floor sitting right in front of you. Every decision in the 2026 market comes down to one massive trade-off: current leverage versus future competition. Today, you have an incredible structural advantage. There are over 14,500 active listings sitting on the market, giving us over 5 months of inventory. The price of that advantage is the carrying cost of a standard 30-year fixed mortgage, sitting between 6.3% and 6.6%. It's highly tempting to hold off and wait for those rates to drop back into the fives before you commit. But the moment rates drop, thousands of sidelined buyers will flood back in. That immediate wave of competition erases your ability to ask for repairs, negotiate price cuts, or demand seller concessions. Securing a below-peak price today requires accepting a higher initial carrying cost. You have to choose between financial leverage right now or intense competition later. If you decide to use that leverage, your strategy has to change drastically based on the specific zip code you're targeting. This quadrant chart maps Austin's fragmented neighborhoods, weighing the price and competition against the distance from the urban core. It reveals exactly where your leverage lives. Core Austin maintains higher median prices, around $540,000. Inventory is tighter here, giving bargain hunters far less wiggle room. To find maximum leverage, you have to look outward toward outlying suburbs like Lockhart and Hutto. In Lockhart, the supply has ballooned to over 8 months of inventory, and up to 63% of active listings are taking severe price reductions. But you have to watch out for hyper-local anomalies that completely defy the wider market trends. Look at the high-demand suburb of Manor. The concentrated demand in Manor completely erases standard buyer leverage. Over 23% of homes there are currently selling above their asking price. Your negotiating power is dictated by geography. You are forced to make a stark choice between a shorter commute and a heavily discounted deal. Location is only half the battle. You also have to choose between grinding out a discount on an older home or taking new construction incentives. The secondary, resale market is currently in a softening phase. Sellers are struggling to find buyers and attract foot traffic. Because older properties sit for an average of 96 days, you have the time to negotiate final sale prices down to 92 to 97% of the original list price. Meanwhile, the new construction market is actively outperforming resale. It's operating in an expansion phase, backed by much stronger demand. This comparison table breaks down the financial mechanics. Notice how the activity phases differ. The biggest difference is financing. Builders offer FHA and VA rate buydowns near 5.99. This scorecard shows the reality check for 2026 sellers. If you aren't hitting these marks, you will miss the crucial new listing window and join the 46.5% of sellers making desperate late-stage price reductions. The mandatory strategy is clear. You must price strictly to exact current first-quarter comps, prepare for a 3-month timeline, and offer upfront buyer incentives so your listing actually stands out. You have to sacrifice the pride of a 2022 valuation to achieve the actual liquidity of a closed deal in 2026. For long-term investors and relocators, the final question is whether Austin remains a viable multi-year play after the correction. The raw value proposition is solid. You can secure properties right now at roughly a $100,000 discount compared to peak pricing. But while the bottom is firmly established, the data explicitly rules out a rapid V-shaped price recovery this year. This long-term area chart projects Austin's equity growth. Based on historical 4.74% compound annual growth rates, a full return to those peak valuations will require a methodical, gradual climb out to November 2030. Capturing today's deep discount requires committing to a minimum 5-year holding period to ride the stabilization curve back to maximum equity. Let's bring all this micro-market data together into a single, actionable framework for your next move. This flowchart maps your 2026 strategy, splitting your choices into buying or selling. On the buyer path, prioritizing raw value points you to the outskirts and resale markets. If you prioritize turnkey readiness and lower rates, you route straight to new construction. On the seller path, your move depends on motivation. If you need to move fast, you must price below comps and offer concessions immediately. If you want to maximize every dollar of profit, you sit and wait. Austin has matured from a chaotic pandemic boomtown into a sustainable, traditional real estate market requiring strategic precision. The window of maximum leverage is open right now. The market rewards those who act on current data, rather than waiting for ghosts of the past or fears of the future.